Amid a slump in demand, assemblers have made a steep rise in the prices of vehicles in the last 16 months despite persistent grilling by the subcommittee of the Public Accounts Committee on various issues hurting consumers' interests. The rupee has shed its value against the dollar by 58% in the PDM tenure from 182.93 rupees on 11th August 2022 to 289 rupees on 9th August, the day Prime Minister Shehbaz Sharif left the office. However, price increases in various models are on par with the drop in rupee value despite high localization. In many costly variants, the price hikes are far steeper due to low localization. It suggests that the rupee depreciation plays a key role in pushing up the landed cost of imported parts and accessories costlier, thus exposing low and high levels of localization by the assemblers. The stock market remained range-bound in the outgoing week owing to many political and economic developments. RFB Limited said the transfer of power from an elected government to an interim caretaker setup played a key role in keeping the index movement within a short range. Additionally, the market sentiment was adversely affected by an increase in petrol and diesel prices of 17.50 rupees and 20 rupees per litre, respectively. On the economic front, the fiscal year deficit was recorded at 6.5 trillion rupees or 7.7% of the GDP. In addition, as of June 2023, the central government debt increased to 60.8 trillion rupees, up by 3.3% from a month ago. Foreign exchange reserves of the State Bank of Pakistan increased by $12 billion to hit $8.1 billion. The rupee depreciated during the outgoing week against the dollar to close at 295.78 rupees, down by 2.46% week on week. As a result, the stock market's benchmark index closed at 48,218 points after declining by 206 points or 0.4% from a week ago. State Bank of Pakistan reported that the current account deficit had reduced by 36% to $809 million in July fiscal year 24 compared to $1.261 billion in the same month of the previous fiscal year. However, July's current account was in deficit for the first time after 4 months of surpluses. June saw a surplus of $504 million. The fiscal year 23 achieved a significant success in substantially reducing the current account deficit to $2.387 billion from $17.481 billion in fiscal year 2022. The huge current account deficit in fiscal year 23 pushed the country towards a sovereign default. The situation worsened due to low dollar inflows, while donor agencies and friendly countries remained unmoved until the IMF approved a $3 billion standby arrangement facility. Inflows from the IMF, Saudi Arabia and the UAE collectively boosted the State Bank of Pakistan's reserves by $8.7 billion. The short-term inflation rose 27.57% on a year-on-year basis for the week ending on 17th August, largely due to the surge in petroleum prices. On a week-on-week basis, the weekly inflation rose 0.78%, showing a rising trend for the past 4 consecutive weeks. The petrol price was raised by 6.40% and diesel by 7.29%. Of the 51 items in the sensitive price index basket, prices of 32 goods soared, 7 dropped and 12 remained unchanged compared to the previous week. India's Ministry of Finance said the country will impose a 40% export duty on onions up to 31st December with immediate effect in an attempt to improve domestic availability of the vegetable. India's annual retail inflation rose sharply to a 15-month high of 7.44% in July from 4.87% the previous month. Food inflation, which accounts for nearly half of the overall consumer price basket, hit 11.51%. Retail food inflation was at its highest since January 2020. Prices of some of the most used vegetables in Indian kitchens, including tomatoes, onions, peas, brinjal, garlic and ginger, have more than doubled in the last few months.